Good morning, traders. Paul here with GammaEdge. Today is Friday, the 3rd of June. Let's get started. Pause your player, please. Read this. It's important to you. It's important to us. When you get done, hit play. The market model continues to improve across the board. I've added some bubbles here. One of the key things to watch, we had a lot of questions come in on this. Just want to make sure everyone's on the same page. We did get a failure across the open. We are expecting an uptrend to continue here. We like to see that when we get this intraday reversal. Did not see that, but we did get it about 10:30 in the morning Eastern time, and you can see right here we did cross the opening range. And as soon as we crossed these short-term moving averages, we had some confirmation to the upside, and you should be thinking about going long with another confirmation here. This is called linear up. When we see this, we're seeing continued sustained buying on this is the ARCX, which is the NYSE, the NASDAQ, and the Amex exchanges. We consider those the quality exchanges. The stocks, options, and ETFs that trade there are very liquid and remove some of the regional noise. The key here is that when we see this on the ARCX, this is definitely a signal that you want to pay attention to, just like we have back here. In terms of the ribbon, all the moving averages are now in an uptrend. You can see that we're moving towards convergence. As soon as this flips, we'll have a longer term confirmation of the bull, and we can increase our long exposure as things improve here. So we want to remain above the ribbons. We are looking to play the pullbacks and go accordingly. So hopefully this is helpful for folks. The index condition, the SPX, the SPY, the Qs, and the IWM across the board are showing a reduction in net negative gamma and increase in net positive gamma. You can see by the magnitude of the relative wings here that we're getting very, very close to parity, where this would be horizontal. And when that occurs, the index condition, we have more positive condition than negative condition. So we are improving. Walking up that, still net negative condition in the SPX, the SPY, the Qs, and obviously the IWM is still severely broken. A couple key things. We did see call gamma improve here from 315 or up to 315 from 310. But over here on IWM, note that we did see put gamma actually increase from 170 to 180. Why that's important is that people are anticipating a downside move in IWM and are building puts out and closer to spot price. We want to pay attention to that. It does suggest potentially some monetization or some weakness is anticipated in the small caps. Near-term expiries, relatively weak. You can see where we are. The little black dot here shows where we are in relation to what's coming off today. I've highlighted the key levels. The IWM is above its predominant positive gamma levels. Everything else is between the goalposts. And when we have that, we don't have a lot of pressure. So just be aware that we may see some monetization today, and that could bring us down a little bit. So net positive expiries on the ones that are equity settled. The cash settled is almost completely dominant on the positive gamma side, but there is no necessarily any pressure. These will cash settle out to a positive value if so desired, with no monetization pressure per se relative to what we see in the SPY, the Qs, and IWM. Looking at the history, I've got some text here. Pause and read this. Just note the tight bunching that we're seeing relative to the price movement. We could break up or we could break down. Go ahead and give a look here. Kind of a mixed picture in where we're at. The market is a little bit uncertain right now, and especially on the Qs with COI dropping now to POI. That typically is not a good sign, and it suggests that the monetization of calls that occurred yesterday is not building out to the upside, and that could be a little problematic for the short term. Flow summary, a lot of red arrows that you see here. We think downside protection is being added, calls are being monetized, although on the Qs, short term, this is the top row here, We did see some calls added late in the day, but we also saw some puts added. Note the transaction levels look exaggerated here, and that's because the net premiums in the queues for the longer term for expiries that are out beyond 30 days are not overly significant. IWM downside protection going in as as we said. Looking at the delta zeros, we're at the top of the range. This is where we finished yesterday. I note that many of these are moving upward, and that is a positive sign. We're still at the top of what we call the flip region. Pay attention to this, fairly significant, fairly important here. What we want to see overall is we want to see a break above this. We want to continue up above 4,200. Your crystal ball is as good as ours on whether we're going to see that. Note to the downside, the 40.57 level to the downside opens up a path downward towards 4,000. So just be aware of the different levels here, and you can watch those throughout the day. The 0 DTE, a huge change from where we were yesterday. Posted some stuff in the Discord. You can go look at those charts. A very, very strong expiry today. Note this level up here at 42.50. This is the dominant call expiry for today. The dominant positive gamma expiry is at 4,200. If we're above this level into the close, we could push up fairly strong because this will be in the money. I note strong deltas in this area. Below the 41.35 zone, not likely to see this, but if we do see this, you can see we're pretty much in play. Not a lot of support all the way down here until we get to around the 40.65 level or so. That is within the expected range. Pushing lower due to 0 DTE, I just don't see it. There's just not a lot of structure down here. Look for the pinning levels. That's where we transition from green to red. As you can see here, different pinning levels are possible, especially in a very low pressure environment in this particular range. The combo, which is the AM and PM settled on the SPX, we do not include the SPY. I've added some balloons here for you to read. A couple key things. We push aggressively north here in terms of the net delta dollars. We feel that's important. We've severely, or significantly, not severely, significantly reduced the net negative gamma level here. We think that's very important. The directionless area, the transition area that we see here. If we get trapped in here today, we think the 4,100 level to the downside could be a short-term support level. Very, very large delta level there. We don't see breaking the 4,100, but if we do break, the absolute line in the sand is 4,000 for a number of reasons, and you can look through here and see what those reasons are. Net negative gamma below the 40.95 level. Things could start to accelerate, but will be mitigated by this positive delta that we see here. To the upside, the 42.10 level, unless we see another repeat of the 0 DTE yesterday, very unlikely we're going to push aggressively up here. If we do close above 4,200 or move above 4,200 into the close, we could push northward, but I don't anticipate that we're going to get much above this JPM leg that's up here, just because of the adjustments that are being necessary as we go up here. The expiration, massive change from yesterday. We had a significant amount of calls that were added to the overall complex. We had a significant reduction of the monthly expiry, and worth noting that not much occurred with respect, even though we moved up in price quite a bit, not much really happened here at the end of month, and that's where the JPM stuff comes off, etc. So just note a lot of positive gamma added to the overall structure for the different expiries. Still Tuesday, Thursdays are weak. You can see that. So the predominant ones are the Monday, Wednesday, Friday, as you can play. The structure has changed quite a bit. We've had a massive expansion of calls to the upside. These little transition reds here have gotten massively smaller, even though price has come up quite a bit, and that's because we've added the calls to the structure. We've seen a huge growth here, still at the 4,200. We called that out yesterday. We're not seeing a huge change here, of course, with the 42.85 strike. This is where the JPM 44,100 contracts are sitting, and we are sitting right here at the bottom of this massive call structure now. We've jumped across the transition. It'll be very interesting to see that we can hold this. 41.65 puts us back in that transition area, with the 4,100 being kind of the last line of the sand before we get trapped all the way back down into the negative gamma. Just want to call out this 38.85 level down here so people are aware of that also. So where are we? So yesterday we didn't think we were going to move aggressively up. The zero DTE action really changed that perspective and pushed us up quite a bit. At least we feel that's in part what happened. Market models continue to improve. We are net bullish overall. We think the pullbacks commensurate with risk management can be added to. The market model longer term, it's improving. All the MAs are with positive slope. The last thing we're watching for now is a bull confirmation with a shorter trend MA crossing the longer term. On the shorter term, breadth is still poor. This is a little worrisome. We're not getting the participation that we would like to have across the board. We're seeing a lot of technology and the liquidity stocks participating, but we're not seeing the broad stock base perform here. We are above the ribbon. As long as we remain above the ribbon, we feel we can add to our long positions on this strength move. Note the wing charts are reversed compared to what we said yesterday morning. We saw a massive amount of negative gamma coming out and positive gamma going in. Just be aware of that. We are close to parity and flipping a lot of the condition there, and that'll lower volatility overall and keep us moving upward. Of course, watch for a failure there. And then finally, that 4057 level becomes, it still remains, we called it out yesterday, if we lose 4057, we think that opens the door to 4,000. So 4,100, 4057, and 4,000 are the downside major target levels. To the upside, watch 4,200 and then 4,285 as the upper bound, which is the JPM hedge. So with that, I bid you farewell. If you like what we covered here today, please join us at GammaEdge.us. That'll take you to a Discord sign-up page. Come on in, all the tools turned on, 14-day free trial. Urge everyone to come in, kick the tires, meet the team. We've got a great group of traders, very, very active, and can help you understand what we're doing here as well as apply to your trading. On Twitter, please follow us so you can get notified of things that we post there. And of course, here on YouTube, follow us. Smash that like button just to indicate your approvals. And we would like to be able to notify you, of course, if you follow us with the next posting. So with that, have a great Friday, a great weekend, and we hope to see you in the Discord. Take care.